It's hard to breathe, but that's alright. Hush.
Hey, what's going on, guys? Welcome back to a new video. Now in this one we're going to be going over different types of entries, so in terms of how you would enter the market. So would you place an instant market execution, or would you place a limit order and stuff like that? Okay, so when it comes to trading, there are two different types on how you can enter the markets. So you can either enter off a risk entry, or you can either enter off a confirmation entry. Now they're both similar in terms of higher time frame point of interest. However, once prices come back to the point of interest, that's when you would go down to the 1 minute time frame or whatever time frame and look for your confirmation entry. Okay, so if we're on a H1 time frame here and we're looking to sell from this sort of supply zone, okay, what price will do is it will create this complex pullback substructure, minor structure breaks, compression into our supply zone. And what you what you'd usually do is, I keep doing this, I keep switching around. What you do is you have enter on the equilibrium or the open. I'll jump into that in a different video, the one after this, whether you should enter off the open or equilibrium. But what you're doing is, if you're entering off the risk entries, you're having your stops above obviously the range. You're entering off the wherever, right, and you're gonna be targeting the lows or the most recent demand zone. Right now, if you do this, all you're doing is you're literally setting and forgetting. So you're setting the sell limit in this case, right, or just instant market execution as soon as price reaches there. Okay, now you can enter off like any bearish confirmation. So for example, if price pulls back, right, if after the first bearish candle, if it takes out the previous bullish candle open, then what we can do is look to trade based off that bearish candle. So down here, right. So there's many ways you can approach it. So if you used to trade quite profitable, you'd already have an advantage over this anyway, because you already know what to look for when it comes to entering the trade. So all that we have to do for the high probability setups, moving on to confirmation entry, all that we have to do is we find the H1 time frame, or any time frame, doesn't matter what time frame it is. But in this example, this is going to be the H1 time frame and where I found my points of interest and where I'm looking to sell from. Once price reaches this region, so once price reaches here, I will then go down to the 1 minute time frame. Even though there's going to be much more noise, I'm going to go down to the 1 minute time frame and just look for the structural swing points. Right? Why I look for the structural swing points? Again, because I'm going to be looking for my break of structure. So as you can see in this example, right, we had a break of structure. Let's just do that. So we had a break of structure, right? Not only did it take this low, but it also took this low, also took this low. Okay, so this here, it took out 3 structural lows. It doesn't matter how many lows it takes out, as long as it took out at least the most recent swing structural low. But in this case, as you can see, it took out 3. And then what we're looking to do is we're looking to simply obviously factor in our confluences. So are we selling at a premium? Yes. Is the momentum in our favor? 2 bars. Just say for example the momentum is in our favor, right? As you can see, momentum is in our favor, right, for example. So the confluences add up. There's an order block here, there's an imbalance here. I'm going to look to take a trade off the open. Okay, so as you can see, price comes back down, comes into our supply zone and sells off. So if you took a sell position there, where you'd have your stops is above there, because it's no longer necessary to have your stops above the whole range. And now, as you can see, it's 8.7%, right? And you can even get away with your stops above there as well, the supply zone. So that'll turn into a 15% trade. But to play it safer, just have it above, where the order block is or the range. And in this case, that'd be a nice trade, right? So it doesn't matter how you trade; it's completely up to you. If you want to take a risk entry, it's up to you. If you want to take a confirmation entry, that's up to you. Now, me personally, confirmation entries are much better. Because if we find a high time frame point of interest, like you do with any, if you're taking a risk entry, you're still finding a high time frame point of interest and using that time frame to stay and jump into the markets. So if you find an order block on the H4, you're going to stay on the H4 time frame until price taps into that zone, and you're still going to stay on the H4 time frame and take a risk entry, right? So for example, you're going to sell straight away as soon as price is at the equilibrium, or you're going to wait for a bearish confirmation candle and sell, right? It's still a risk entry. Or you can set a sell limit once price is starting to approach back to it. Okay, once we know prices, once we know the momentum is in our favor, right? In this case, you can already see that it's invalidated the bearish move, right? So looking at it in terms of momentum, it's in our favor. The confidence is up. I'm going to take a risk entry. Okay, so that there, it works. Don't get me wrong, but there is obviously pros and cons to it. With the cons, with risk entry, the only con is I find is that it reduces the win rate. So if you're taking a confirmation entry and you're looking for that shift in structure on a smaller time frame, that's confirming that price could potentially reverse down. So there's going to be a high probability of price doing so, because it's not a risk entry. We're not waiting for price to react. Okay, because what could happen is, right, you could have also a point of interest up here, right, in which price could still come up and tap into that one. But if we're looking for a confirmation entry, if you just have, if you have multiple point of interest, especially, make sure you always go for confirmation entry. But if you have one point of interest that you're thoroughly focused on and you're going to only see that's valid, then that could be a better opportunity to take a risk entry. But again, if you have quite a few point of interests, you can look for, confirmation entry, okay? And it'll just help, once price reacts, once price pulls back into a point of interest, that's up to you to just, to see how price reacts. If you start to break structure, then that's going to be the point of interest we're going to look to trade from. But if it continues higher and then reacts to that one, right, takes out lows, we're going to look to trade that one, right? If it ignored that one and continued higher, so even all the way up here, right, mitigate an order block up here, whatever, right, we're going to look for those structure breaks. Let's mitigate that. Okay, as long as we're still staying in this range, that's all that matters. So the most extreme we can get it to the range point high is obviously we can have our stops above there and we can sell right down. Okay, so yeah, just obviously once you start factoring in everything, you'll understand everything, but it's up to you how you take a trade. Personally, I prefer confirmation entry. And it depends on how much time you have on the charts. If you have less time on the charts, then the risk entry is better for you. So if you work full time, if you work part time, if you have, and on the days you have hobbies that you go to, and you ain't going to have much time on the charts, right? So you're better off taking risk entries in that case. So sell limit orders, buy limit orders, right? We don't really use stop orders, but setting buy and sell limits. Or if you're on the charts, set it into an execution rather than waiting around for the trades to play out and then entering. But if you have more time, you trade full time like me, or you're generally at home working from home anyways, or you just have more time than other people, then take confirmation entries, right? Because it'll build the higher win rate over time. So yeah, those are really the two differences really in terms of this. Because what we would do is again, when price reaches our point of interest, we'd jump down to the 1 minute time frame, look for a break of structure, and factor in everything, and then look to take a trade, right? So what I'll do is I'll jump on to a different video. I'll explain pretty much a trade recap. I know there's plenty of trade recaps in the trade recap section, but I want to do one that prioritizes to looking for the break of structure confirmation entries, okay? Because I'm not going to do a recap on a risk entry because there's no point. It's just the risk entries, just trading from there, so a point of interest, right? But on a 1 minute time frame, whatever time frame that you go down to on a smaller time frame to look for the structure breaks, that's up to you. You can go down to the 3 minute, you can go down to the 2 minute, go down to the 5 minute, but preferably if you're on a 1 hour, you want to go down to the 1 minute to the 5 minute. And if you're on a 4 hour time frame, you want to stick to like the 15 minute and lower, just because you can start to see the structure breaks a bit more clearer. And then if you're on a daily, the hourly time frame is probably the best to look for the structure breaks. But it's up to you. It's up to you and how much time you have with life, really. So yeah, I hope you enjoyed that one, and I'll catch you on the next one.